You might have heard the famous quote by Albert Einstein, who once remarked, "The hardest thing in the world to understand is the income tax." Indeed, many wealthy individuals hire expensive accounting experts to help them minimize their tax liabilities, and over the last decade, we've learned a lot about these strategies. This knowledge has empowered companies and individuals alike to grow their wealth at an accelerated rate. So, let's explore these strategies. Welcome to Financial Roadmap, where your journey to wealth begins. Before we begin, remember that this is not financial advice. It's simply a look at how the wealthy manage their taxes, and we believe this information is valuable for you to know. So, let's get started with 10 effective ways rich people minimize their tax burdens. 1. Invest all of it. The first key strategy is straightforward. The rich don't sit on cash unless necessary. The golden rule of tax management is that reinvested profit is not taxable. If a business anticipates a profit of $5 million and decides to reinvest that amount back into the company before the fiscal year ends, they won't owe taxes on those earnings. This strategy allows businesses to grow quickly while simultaneously boosting the owner's net worth without incurring substantial tax liabilities. In essence, investing back into the business can be a powerful method to grow wealth without the immediate burden of taxes. 2. Deduct everything. The second rule of tax optimization is to deduct everything possible. If a business needs something to function, the expenses associated with that need are often tax deductible. For instance, if you need a new car for your business, let the company purchase it, and you can use it for both personal and business purposes. Here are some common deductible expenses rich individuals utilize. Technology, laptops, phones, and other gadgets that are necessary for business operations. Travel, costs for hotels and flights related to business trips. Home office expenses, costs like internet services and utility bills for home office setups. Health insurance premiums, these can often be deducted as well. Meals and entertainment. Going out to eat can also be considered a deductible business expense. The more items you can deduct, the lower your taxable income becomes, which is crucial for minimizing tax payments. 3. Move to tax-friendly locations. Moving to a place with little to no taxes can significantly impact one's wealth. Historically, wealthy individuals have relocated to tax havens like Dubai, Monaco, the Cayman Islands, or the Bahamas. These countries do not impose income taxes, allowing residents to keep more of their earnings. However, the cost of living in these places can be high, which can make this strategy seem less appealing. Nonetheless, if you're paying high taxes in your home country, moving to a tax-friendly location can still result in significant savings. 4. Send earnings overseas. Another strategy employed by wealthy individuals and corporations is to establish businesses in tax-friendly countries. Companies like Facebook, Google, and Apple set up operations in Ireland due to its favorable tax environment. These businesses own the intellectual property, requiring their U.S. counterparts to pay a licensing fee to the Irish entity. This arrangement effectively creates a legitimate deductible expense for the U.S. company, reducing its taxable income. By shifting profits overseas, these corporations pay far less tax, sometimes as low as 1%. Additionally, if an individual resides in a low-income tax country, they might set up a local company and invoice their U.S. subsidiary, further minimizing tax liabilities. Ultimately, many tech giants prefer to pay fines for tax evasion than to meet their tax obligations fully. 5. Charitable donations. Donating to charity is another method the wealthy utilize to minimize their tax bills. Donations made to qualified charities are not subject to taxation, which is why many affluent individuals establish their foundations. By doing this, they can ensure their contributions are utilized effectively, often claiming they can manage the funds better than the government. Interestingly, charitable foundations incur deductible expenses, allowing for the donation of assets like land or vehicles, which still count as charitable contributions. Furthermore, individuals can use the donated items, such as vehicles, while maintaining the charitable designation on paper. 6. Opt for equity over salary. Instead of taking a salary, wealthy individuals often choose to receive equity in their companies. As one business leader stated, "Pay me in equity." This strategy serves two purposes. Equity can appreciate in value over time, and it's not taxable until sold. For example, Elon Musk's wealth largely comes from equity-based compensation linked to company performance. This approach emphasizes that the rich often do not have piles of cash, but rather hold assets with the potential for growth. By understanding this method, you can adopt similar strategies to work smarter with your wealth. 7. Invest in art. Investing in art is a unique tactic that only the wealthy seem to exploit effectively. The art market remains one of the last major unregulated markets. When someone purchases a piece of art, it counts as a deductible expense. Here's how it works. Suppose you earn $1 million and decide to buy a $1 million painting. Since the expense matches your income, there is no taxable income left. Fast forward 3 years, and that painting is now valued at $6 million. Instead of selling it, you could donate it to a museum or your foundation, receiving a $6 million tax deduction. If you later decide to sell it for $6 million, you can reinvest all of that back into more art, effectively avoiding tax liabilities on the profits made. 8. Acquire multiple nationalities. Another tax strategy employed by the wealthy is maintaining multiple nationalities with no fixed residence. Tax obligations typically depend on your country of residence, but many super-rich individuals avoid a permanent address altogether. They may possess properties worldwide and provide proof of residence in countries with less stringent tax regulations. Some even purchase large yachts and declare them as their primary residence. This strategy allows them to navigate the complexities of international tax law and potentially evade substantial tax burdens. However, it's essential to note that this method can be complicated and may not be sustainable in the long term. 9. Gift money away. Did you know that gifting money or assets can be a non-taxable event? In the United States, there's a $15,000 cap on gifts, meaning that as long as you gift less than this amount, it does not need to be reported to the IRS. However, for the wealthy, the lifetime gift exemption is much more significant, reaching $1.7 million. By strategically gifting to others within these limits, individuals can transfer significant wealth without incurring tax liabilities, which can lead to substantial savings in the long run. 10. Utilize cryptocurrency and privacy coins. The rise of cryptocurrency has introduced new possibilities for wealth transfer and tax optimization. With the ability to store immense wealth in digital currencies, rich individuals can move significant amounts discreetly. While major cryptocurrencies like Bitcoin and Ethereum are heavily regulated, resulting in transparency and tax obligations, many wealthy individuals still leverage them due to favorable tax rates. In many countries, profits from cryptocurrency transactions are only taxed at around 10%, which remains more favorable compared to traditional asset classes. Moreover, privacy coins, cryptocurrencies that allow for anonymous transactions, have emerged, providing even greater opportunities for tax minimization. While they remain legal in many jurisdictions, their use can be complex, requiring careful navigation of existing laws. In conclusion, these strategies illustrate how the rich can minimize their tax burdens while growing their wealth. From reinvesting profits to utilizing tax-friendly locations and innovative financial instruments, the wealthy have mastered the art of tax optimization. However, it's essential to recognize that while these strategies may work for some, they may not be suitable for everyone. Understanding the principles behind these tactics can provide valuable insights into wealth management and financial planning. Remember, knowledge is power, and being informed about the financial strategies of the wealthy can help you navigate your own financial journey. If you found this video helpful, be sure to subscribe to Financial Roadmap for more insights and tips.